Hello everyone, we are here to understand about MACD. We have previously understood about moving average and as well as the power of exponential moving average and also power of the moving average ribbon. Now let's understand about MACD. How MACD is different than moving averages or moving average ribbon. Okay, first thing is MACD. MACD, the name itself arrived from the moving average, and CD means convergence and divergence. So if we trade with this convergence and divergence, you will have a fruitful results. Otherwise, if we just simply randomly take over on the moving average cross and then make a trade, if it is failing, then it is not good. So wait for a proper convergence and divergence so that you can make a maximum out of it, and we call this indicator as an hybrid indicators. And MACD is an outcome of moving average. It is derived from the moving average. Moving average, we were talking it as a lagging in nature, whereas MACD is leading in nature. We will tell you how exactly MACD is leading in nature in the upcoming slide. So, and also we will show you the live trade session or in the direct chart. And MACD is used to recognize the trend. Either you can recognize whether market can go up or go down. You have a clear visibility also can notice or can be seen in this MACD. And the momentum is important. What is this momentum? That momentum can be seen through histogram. For example, if we are throwing the ball upside, what will happen? It will go up. After that, for some time, it will be having a full force. When we are throwing the ball, it is having a full force. At some particular point in time, it is like a floating. It is not like that much force will be there. Just there is a momentum that will maintain. There will be no strength. That strength, during that strength, it will either take up some more push is there. If some more push is not getting, it will what? It will comes back to the gravity. The same way, moving average convergence and divergence also works here. This is called a momentum. This momentum can be seen in histogram. That momentum will be seen by the volume in this moving average. We will show you in the chart how exactly you can see this. Looking after this momentum, if you are able to understand, okay, market, the buy side, whatever market is going on the upward direction, if the momentum becomes slows down or slowing down, you should be alert of or stopping your trades on buying if you are going for a long, or if it is in the short, if you should stop shorting, because market comes on a like a situation of like it is coming into the settlement state or coming reverse and from coming back towards gravity. Let's have a look on this. So this you will be noticing in the histogram. And in this moving MACD, it is something similar like RSI, but still micro comparison is not possible like how we do in RSI. RSI will give you micro comparison and you can have more trades in RSI, whereas MACD you have a less trades. And but if you take a convergence and divergence trades, it was like at least little promising trades. So micro comparison would be difficult in this MACD. For best results to be traded on MACD divergences, if you are just instead of trading on MACD crossover, if you get a divergences and if you find that kind of an opportunity, there are a possibility that you might win the trade. Success rate winning is very high. And getting such kind of MACD divergences is not very often, but it is very rare and less opportunities. But if you get, the success rate would be definitely good. So that's one positive scenario. And the signal confirmation, many times you will get a signal confirmations that okay, crossover has happened from downside or put side or call side. All these things you will be hearing that, but all the call side and sell side will not become success. So wait for proper convergence and divergences and you can make a good clarity on good clearance on this trades. Let's have a look on this detail. So the MACD setup, what exactly we need to do this MACD setup? First, you need to do the moving average because it is arrived from the moving average. Just take a EMA with a 12 and as well as 26. Okay, so this is a standard setup from the MACD. You can refer the book. I'll put it in the description. So refer the book. Also, they have mentioned 12 and 26 is a very good number for this MACD. And This MACD reference also, because we have taken 12 and 26, so you have to put MACD also 12 and 26, and the signal period either is 8 or 9. So normally people will take 9 or 8, so you can go for either one, or period 8 period or 9 period should be good. Okay, so what is this? How exactly this is going to arrive? This MACD, this is a black line. This is a MACD line. This MACD line is a difference of this moving average, that is 12 and 26. Difference of between these two moving average is a MACD line. That is what is being drawn in black. And this red line is a signal crossover. This signal crossover is considered either on a 8 or 9. So this, as soon as this crossover happened, people will go for a trade. Okay, this is crossover happened from the downside to upside, then the movement will start. This is what the estimation. Okay, so this is what the normal everybody does. And this is what, as soon as this moment the crossover happens, look at this trade, the histogram also, you can see the good momentum here, the good momentum or good force or good positive vibe you will get it because of the volume, because crossover has happened, and you are seeing the good strength of green line. It is like a going high after a high, every candle is going high after high. That's a good strength. As soon as one red line comes, no, that means it comes to the, when it is forceful, it was there. And once this red line or slower comes, that means the momentum situation starts. So as soon as you're seeing this momentum status, so you stay away from the trade, because there is a possibility that market might take a reversal possibility. So sometimes it will quickly take it here, or else it will make some fake breakout, and also it might come down. So there is a possibility. I will show you with an example as well, so that you will have more clarity. And see here, crossover happened for a downside. What exactly happens? Seller side will have a confirmation again, but the confirmation or the momentum gets reduced, and again sellers comes, momentum increases, and again momentum reduced, and momentum increase and momentum reduce. So you have to see the momentum. The clean solid green is like a momentum, and as soon as it is turning into the red, it is the momentum is less or volume is less. Though it is on the buyer side, that means zero is on the neutral side, below zero is a seller side, and above zero is the buyer side. Though it's on the buyer side, the momentum is not there. Momentum is important in this trade. Even though if the momentum is not there, still if you take a trade, maybe if you are in option, your premium will be eaten very badly. And if you are waiting for this moving average confirmation, okay, I got a confirmation or crossover. If the momentum is over, if you are taking the trade here, see, looking at this, the market is here only, it's not moving so fast. So you should catch this kind of a force, not on this kind of a range bound. When you are looking after this, so it is important, you should find a solid green. As soon as this solid green fades away and started red, then the momentum is slower, or once you throw the ball, it will go up for some time. After that, what it will happen, it will become a settled here. During this settlement period, it might stay for, it might go little more up, but not that much forceful. After that, it will start falling. So be careful during this situation. Avoid your trades on this momentum period. Okay, this is one thing. So histogram is going to give you a volume pressure. Take a note of this. And the crossover. Okay, so these 3 points we have understood. We have understood about this crossover and histogram and momentum. Now I was talking about convergence and divergence, which is, see, this crossover, you might take the trade here, it will go success, and if it fails also, it fails, and you should exit with the proper stop loss, because stop loss is so bigger, you might be coming below this, the stop loss would be very high or tight. So if you're in the nifty or bank nifty, stop loss is a bigger number, so be careful on the stop loss. If you're confident, only take it and go with a lesser stop loss. Don't wait till here your stop loss, wait below the moving average and exit if you're not ready to take so much risk. And I suggest, if the crossover confirmation, but still wait for the divergence, or I will just give you an education on this divergence and convergence, so that it will give you more clarity. And this is for an education purpose. This is not any recommendation. Again, we are mentioning. So let's have a look on this. Now, convergence and divergence, we are talking. See here, what exactly is happening? Market is down. Again, it is coming down. What exactly happened? Market has come or made a lower lows. This is a low and lower lows it has made. That means what? The momentum should be more, right? Here, it has made MACD line. Okay. Again, it has made come down. So I should be expecting this should be lower than this, right? Like how exactly it has formed here. Like this, my MACD line also should be like this. Is my MACD line like this? No, right? I'll just give you a clear clarity again. Okay. See, here it's a clear cut. That means it is below lower low. My MACD also should be lower low. Is it a lower low? It's not a lower low, right? That means what? The pressure, those sellers are there, the pressure is not there from MACD side. That means for seller side, pressure is not there. That means what? It's an indication that we are in the convergence, or where market is pushing down, still there is no pull down from sellers, or still there is no pull it down from MACD line. This is called an convergence. Say market is coming down, still it is in the upward direction, right? So this could give you a good momentum. See after this how exactly it started going up, right? So you should catch this kind of opportunities that will give you a more fruitful opportunities. Okay, so this kind of an opportunity identification, if you make this kind of a trade, out of 10 trades you might be having a success rate of 8 to 9 trades. So that's a possibility of success rate in MACD. Look for such kind of a convergence. Okay, so or convergence or divergence opportunity. For example, if we see here market started going up, again it has started going up, so this is higher, right? It's a, though it's look like a double bottom, but it's a higher, it's going on upward direction. This MACD is also going on the upward direction, so this you cannot consider it as a convergence or divergence there. So if at all, if this moving MACD is closed below this, then there is a very good opportunity for you to short this, or for you to go for a put side. Or here there is no such opportunity seen, so just stay away from the trade. Though it is giving a crossover here, you might get this indication. Okay, and fourth important point, hope you are clear on this convergence and divergence. If you have any doubt, please comment it in the comment section. Fourth important point, now we should understand one more point. What is that? See here we got the crossover, MACD crossover. Okay, so here imagine if you are taking, or if you are planning for a trade setup here, whereas the red to green crossover is happening here, means what? This has given an indication here itself. So here it's very clear indication that MACD is an advanced indicator compared to the other exponential moving averages or other moving averages. So it is giving an early indication that market might take an upward direction. This moving average is crossover has happened towards the upward direction. This red signal line, it has given the signal for a people, or if anybody is thinking to buy or trade, they can take a trade, they can, or they can plan a trade here. They're planning an early indication got here, but as per the moving average, it got little later, maybe after 10 to 12 trading days. If it is or 10 to 12 candles onwards, it started giving. And once it crosses completely stabilized, then we might go trade from here onwards, right? So this is the benefit of being in MACD rather than moving average. Moving average is little late and MACD is little early. That's why we call it as an early indicator or a leading indicator compared to the market. So you are getting early indication that market started an uptrend. Okay, so these four are important points where you can refer for, or you can use it for MACD as an education purpose. Please have it your own analysis before making any trade position. Let's have a quicker view on the live chart. Okay, I'll just share my screen on Upstocks. Yeah, this is my Upstock screen. Just a minute, I'll just expand this. Okay, so what exactly I need to do? First, I need to take a movie, the MACD line, right? Before going to MACD line, what I should do? I should put the moving average, right? So let me put the moving average. Studies, moving average. Moving average, I should put 2, right? 2 moving averages. So I'll put either 12 or 26 or whatever. I'm just putting roughly one number. So you just check the numbers is up to your standards or refer your numbers. I'm just keeping one number or a random number or 12, 26, what I'm considering for my trade setup. I'm just putting that as a, for education purpose. Change the color for I'm taking red and blue here. Okay. This is your 12 and 26. Okay. 12 and 26 moving average setup. What I'm going to do, I'm going to add MACD now. Moving average is done. I'm going to add MACD because I've taken 12 and 26 as an as a moving average. So the difference between these two moving averages is my MACD. So my MACD also should be the same number. Okay. So already MACD is preset on this 1226 only. That's why I'm keeping the same number here. I'm not changing anything. And signal I've kept 9 period. Okay. This is the setup. Just have a look on this. I'll just take a horizontal or vertical line here for a more visibility. Here, see here it has given a crossover here. But moving average crossover is actually point number 1. You got an early indication, you got on 24th of March itself, whereas the market actually started trending from 10th of April. Almost 10, 12 trading sessions, you got well in advance about this moving average. Okay. And second, the convergence and divergence. So just it's a continuation of the same video. So moving average, point number 1, we had discussed on this, the vertical line that is cross over this one and this one. So you got an early indication. That's a leading indicator. The second point, what we need to think over it or what we need to point out here is the convergence and divergence. Okay. So convergence, where exactly I'm getting a convergence? Let's see. See, this is a down scenario, right? I'll just take up a doodle here. See, this is lower, right? So technically my MACD, because the lower MACD also should be lower in the nature. Is it happened lower? No, right? In fact, it has crossed even higher. That means what? It is a converged. It is going on the upward direction or it has closed above the previous high, whereas it has made the lower low. That means it is working reverse way. The market here, it is technically showing down, whereas MACD is showing on the upward or closing on the up. That means what? Market might take an upward direction. This is a convergence or divergence. So use this trading out of 10 trades, 9 to 8 trades or 8 to 9 trades would be confident. Okay, so that's the second one. And third one is the downward as well. When you think market is a take a downward, just this is a crossover, right? This is a crossover. If you wanted to make a position, be careful because market might take a average here. See, market, there is no movement only. If you take it the positions, or if you are even intraday trader, if you look after this, your premiums are gone. So be careful on this kind of a situation. Wait for a proper trend to start. You should make a position here, just see the rally. Okay, if you see here, or else edge of this point or edge about to cross this, this could be one scenario properly crossed before crossing, or it is just touching and then many times it is failing. So be careful on that. Okay. And fourth point is final point, the histogram. Histogram is a volume pressure. Once it is a green, the solid green, that means the buyer pressure is there. Once this green started turning into red, that means what, the buyer pressure become reduced, the momentum has reduced. The whatever the ball if you are throwing, it is going up, but once at a particular point of time the energy gets reduced. So then what will happen, it will start pulling back to the original position of a gravity. Same thing this applies here. As soon as the volume is not there, market tries to or tend to come back to the original position. So be careful when the solid line rises or sorry decreases. So that means it's an indication that there is a possibility that market might take a reversals. Okay. So what exactly you should look for, this histogram will give you the volume pressure. Okay. So, and this kind of a situation, the histogram, see here, histogram is high here and again histogram low here. It is like a peak and turf. Here, the market is making high and again falling. So in this situation, market is again expected to fall. So that is also one of the indicator. You can have a multiple view of this MACD and make use of this. But this is a rare opportunity. Make use of it better. Thank you for watching. Please do like, share, comment, and subscribe our channel.